Welcome back, everyone. I hope you're having a great day. And in this episode, we're going to take a look at two fast growing companies that currently trade for below $25 per share. Both of these brands have seen incredible revenue expansion over the past few years, with a lot of potential to continue to grow that revenue for long into the future. Analysts are bullish on these stocks, and they believe over the long term, they will continue to grow, expand their market share, and become leaders in their respective industries. And the two companies we're going to go over today have very different operations. The first stock is from a tech company who has a focus on big data and artificial intelligence. Meanwhile, the second stock is a food company. They operate within the consumer sector and sell unique food products all across the nation. And for both companies, we're going to take a look at their recent financial performance and the future growth expectations for the next few years going forward. But before we deep dive into each of them individually, I'm going to ask you to please hit that like button and subscribe. I'm the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. And of course, today we're going to focus on two fast growing companies that currently trade for below $25 per share. And that first stock is ticker PLTR, which is Palantir Technologies. They currently trade for $24.17, and they've seen some major expansion over the past year. They have a market cap at above $45 billion, and this is the tech-based company that has a strong focus on big data and artificial intelligence. And jumping over to the company's website, right on their homepage, they clearly state what the company does. As a big data firm, they've built a software that lets organizations integrate their data, their decisions, and their operations into one platform. Their software empowers entire organizations to answer complex questions quickly and bring the right data to the people who need it. So a big problem with organizations now is that they have all this information and all this data, and they actually have to turn it into usable facts to apply to decision-making processes. And that's where Palantir comes in, and they have market-leading software within this big data industry. And we can see that this fast-growing company actually reached a peak back in January 2021 of over $39 per share. And from that high point, they have now fallen down over 38%, back down to the $24 level. So if you're interested in the big data sector, definitely a nice tip to maybe buy some shares of Palantir. And for example, ARK Invest, the major hedge fund and the investment company that has a big focus on disruptive innovation and investing in the companies who plan to change the world going forward, has been loading up on Palantir shares as the price has been falling. The yellow line indicates the share price of Palantir, and we can see right as the company started to fall and began trading around $20 to $25, the purple line indicating the amount of shares owned by ARK Invest absolutely skyrocketed, and now the asset manager owns over 27 million shares of Palantir in their overall portfolio. So Cathie Wood and her team at ARK Invest must see a ton of potential for Palantir Technologies to continue to grow for long into the future. And taking a look at the company's Q1 2021 earnings report, they saw some incredible growth to start out this calendar year. The revenue in Q1 grew 49% year over year to a high of $341 million. Their operating income in the quarter was at $117 million, representing a 34% margin on their total revenue. And their adjusted free cash flow came in at $151 million, representing a $441 million increase over the same time period back in 2020. So the company's revenue is expanding rapidly, their operating income is improving, and they're generating positive free cash flow to start out this year. And also in the first quarter, Palantir achieved an $800 million annualized revenue run rate from their United States customers. So this company operates domestically and internationally as well. And from their home country, they project over $800 million of total revenue coming in over the next year. And if you're unaware, Palantir operates within two main business categories: government revenue and commercial revenue. And in the first quarter, their government revenue grew 76% year over year to $208 million, which is absolutely remarkable. And 83% growth came from US government agencies. And why I believe this is a very strong point for Palantir is because governments are usually very sticky customers. Once the government picks one organization to conduct business with, they tend to arrange long-term agreements with that company, leading to continuous and growing revenue flowing into Palantir. It's not very often that a government, once they trust the brand, they get used to the organization, they just switch on the fly. It takes years and years to develop that technology for the government, and usually, once that relationship is built, it lasts for years on end. So I'd love to see Palantir continuing to expand their relationship with the US government and also international governments, because those really lead to highly lucrative deals for decades to come. And of course, if we take a look at their second business segment, that's their commercial business, which grew 19% year over year, and that grew to $133 million in the first quarter. So we can see with over $200 million of sales, the government segment did outperform in Q1 2021. And we can see as the company continues to grow, generate greater revenue quarter after quarter, their gross margins have been improving as well. They achieved an 83% gross margin in the first quarter, which is absolutely remarkable. 83% gross margin shows how differentiated this company is in the software sector. They can maintain these margins long term and become a highly profitable company as the company continues to expand. And their contribution margin did achieve 60% overall as well. And Palantir also has some major deals in the works. So of course there is still a lot of risk with this company. They're not fully profitable just yet, but they have a ton of potential revenue currently down the pipeline. The company finished Q1 with over $2.8 billion in total remaining deal value, which grew 40% year over year. And their average contract duration is at 3.7 years. So when Palantir does lock up a new customer, and these long-term deals provide consistent and growing revenue into the business year after year, similar to what I explained when we went over the government growth. So I think over the long term, Palantir, at least for the next 2 to 3 years, will still see continuous revenue generation and growth because of the massive pipeline of deals they still have already signed and in the works. And Palantir did give guidance for their future expected growth. And for Q2 2021, they believe total revenue will grow by 43% to around $360 million with an operating margin of 23%. And for the full fiscal 2021, they actually raised their guidance and believe they're going to bring in $150 million of positive free cash flow. And over the longer term, for this year and the next 4 years going forward, so through 2025, they believe they can achieve 30% annual revenue expansion year after year. So if you want to buy into this company right now, if they can achieve this goal of 30% revenue growth year after year while maintaining very high margins, I do believe that this will become a profitable and big name company by 2025 and beyond. And now if we take a quick look at their balance sheet, Palantir looks to be in a very healthy financial position. They currently have over $2.3 billion worth of cash and short-term investments sitting on the balance sheet, and their total current assets come in at over $2.5 billion. And if we compare that to their total short-term debt at only $667 million, that means the company right now has a current ratio between 3 and 4 and is very, very sustainable over the shorter term. And something I like to see is that the company's total liabilities only come in at $1.2 billion. So the company's cash on hand at over 2.3 is almost 2x their total liabilities, and I'm not really worried about the debt level Palantir has right now. And taking a look, their actual long-term debt at $198 million is actually coming down. They paid off around $200 million back in 2019, so the company's done a great job of reducing their liabilities and healthying up the balance sheet overall. So I think the company, for a young growth play that still has a lot of associated risk, is not in a bad financial position. Very little debt, positive total equity, and a nice cash balance to actually fund their growth and future expansion over the next few years. And the fact that they're going to generate $150 million of positive free cash flow over this year is a very strong sign as well. So Palantir, ticker PLTR, the big data and AI company, is definitely a brand to take a look at if you're willing to pay a premium for a fast-growing company within the tech sector. If you believe in big data and you're comfortable owning a very volatile company within the industry, then definitely a brand to take a look at that currently trades for below $25 per share. And now we're going to continue on into the second stock for this episode, and it's going to be ticker TTCF, which is the Tattooed Chef. They're a plant-based frozen health food product, and they're currently distributed all across North America. They're trading for $23 a share, and the company has a current market cap at $1.88 billion. And overall, this is still a very young company, and they've been trading on the public market for less than a year. And currently, in Q1 2021, similar to Palantir, they had a record-breaking quarter. Revenue in the first 3 months of the year was $52.7 million, a 59% increase over the prior year. And their gross profit on that $52 million came in at $13.7 million. So of course, this is a much smaller company than Palantir, and when we're discussing the numbers, you have to take that into consideration that the current market cap for TTCF is less than $2 billion. So there are a lot more associated risks when buying into such a small company. And over the past quarter as well, their branded revenue grew 105%, which is absolutely phenomenal as the Tattooed Chef products continue to get distributed in more stores all around the world. And currently, the company has done a fantastic job of expanding their plant-based frozen food options. We can see that year after year, their product line continues to grow, and that at the end of 2021, they're having a goal of 62 different SKUs available on the market. And in a recent press release, the company is showing great progress to achieve that goal and just revealed 5 new multi-serve meals that will be hitting the markets over the next few months. So this is a great sign. They have new cauliflower spaghetti, sweet potato gnocchi, and many more different options available on the market for some different type of meals, whether it be lunch or dinner, available to consumers. And taking a look, they are already a national brand. Throughout 2020, they were in 4,272 stores, and you could find their products through 23,000 points of distribution. By the end of 2021, they have a goal of being in over 10,000 stores with over 65,000 total points of distribution. And currently, over the first half of this year, they've been expanding rapidly into more and more stores, which is a fantastic sign. And just a few weeks ago, Tattooed Chef announced that 2 of their key products, the organic greens and the zucchini spirals, will be available in Whole Foods nationwide. 2 of their products will be distributed amongst every single Whole Foods all across North America, which again is extremely impressive. And earlier in 2021, back in March, the company announced that 6 of their products, 6, will be in every Target store all across the United States as well. 6 different products is absolutely remarkable. And within a Target, they're basically taking up one section of the freezer just for Tattooed Chef products, which is extremely impressive for such a small company that's not owned by one of the big conglomerates. Their California mac and cheese, their veggie hemp bowl, their Buddha bowl, and 3 other alternatives you can find in a Target store right near you. And the company is also being sold in a bunch of other retailers. 7-Eleven, Smart & Vinyl, Kroger, Safeway, Publix, and all these different brands are currently sharing Tattooed Chef goods. So the company, they're still very early on. There's still a lot of a risk that they can actually turn out this mass product distribution level to actually get these products at high quality in all these stores all across the country. But so far, they're looking pretty good. And for a company valued at under $2 billion, that's going to be selling 60 plus products in tens of thousands of stores nationwide, I think it's getting a very attractive look. And currently, the company just made a major acquisition to expand their manufacturing capability by purchasing Karsten's Tortilla Factory. This will allow the company to expand their overall production capabilities for all their different products and allow expansion into the Mexico style of food that's a market that they were previously not into. And after this acquisition, the company actually raised their guidance for the rest of 2021 to around $235 to $242 million of total revenue, which would mean an increase of 58 to 63% over the 2020 sales. So if this company can achieve this average growth rate of 60% year over year, that is absolutely remarkable. And for a food company, if they can get their gross margin to between 20 and 25%, I think that'll be very impressive once again. And for the entire year, their adjusted EBITDA is estimated to be between $2 and $4 million. So not a lot, but that's what you're going to expect if you're taking the risk of buying into this young growth company very early on in their development. And Tattooed Chef has given guidance for their future expected revenue and EBITDA over the next 5 years. We can see that for 2022, they're projecting $300 million of total revenue with a gross margin between 25 and 30%. Fast forward 5 years from now through 2026, they believe their annual revenue will be around $1 billion with a gross margin of over 35% and adjusted EBITDA at around 20+% of sales, so $200 million plus. So overall, over the next 5 years, the company does believe they'll achieve the $1 billion in annual revenue status, and hopefully they can do just that. And similar to Palantir, although this is a young company that does have a lot of associated risks, their balance sheet isn't actually looking too bad right now. The company has $185 million of total cash and short-term assets of $267 million. Compare that to their short-term debt at only $41 million, their current ratio is very, very high and actually above 5. So over the shorter term, they're going to have no liquidity issues and the company will be able to operate with a lot of cash on hand. And taking a look, they have very little long-term debt as well. Only $1.9 million of total long-term debt. That's really nothing. $1.9 million in our day and age for a company worth and valued at $1.88 billion is pretty much nothing. And we can even see that year after year, they're paying down that number. So total liabilities for the entire balance sheet at around $45 million compared to total current assets of $267 million, and the overall ratio between current assets and total liabilities around 5, it makes me feel very comfortable owning a few shares of this brand in my high risk, high reward growth stock portfolio. I think Tattooed Chef over the shorter term is not going to have any liquidity issues. I think they'll be able to fund their growth over the next few years. And for a young company, they are showing positive equity of $287 million, which is a very strong sign. So TTCF is the second small growth company trading for below $25 per share. Definitely worth taking a look at for your own portfolio if you want a name in this fast growing healthy food industry. So overall, now we're going to wrap up the episode. I want to thank you for watching the video to the end. Of course, we took a look at Palantir, the big data analytics company, and then Tattooed Chef. Two growth names currently trading below $25 per share. Definitely worth doing some research into and may make a nice addition for a riskier aspect of a growth portfolio. So thank you for watching the video. Please hit that like button and subscribe, and I will see you in tomorrow's episode.